Well, moving on, Pawan Parakh, a fund manager at Geojit Financial Services, joins us now to discuss market fundamentals as well as his top sectoral picks. Thank you so much, Pawan, for joining us. Well, the last couple of trading sessions where you saw intraday recoveries sparked hopes that market had seen a bottom. But what is your view currently? Do you feel that this is now a good time to go ahead and buy stocks?
Yeah, hi, thank you for having me. I think, we've seen a very sharp correction in last 4 or 5 months. In fact, if you were to compare this fall versus COVID fall, while the price correction is less, time correction is actually even more than what we saw during COVID time. During COVID time, the bottom was made within 3.5 months. Now we are 5 months into this fall, and we still don't know as to whether markets are going to take a U-turn or not. But having said that, given the time correction, I would want to believe a lot of the stocks, at average high quality mid cap, small cap stock, everything has fallen by at least 30-40%. And that makes me feel a bit positive about, buying some stocks at this level. Having said that, I must also say that, all of this tariff thing, as long as that sentimental negative impact continues, I don't think a V-shaped recovery will happen in the markets anytime soon in next 1 or 2 months.
Pawan, M&M. Was M&M a part of your portfolio at any point of time in the last 12 months? It's been such a wealth creator, and now the stock is suddenly tanked on fears about increasing competition coming in from Tesla.
Right. So we do have a small allocation to M&M in our large cap fund. And I actually, it's a little confusing because, the recent launches and the booking that they have been, has been phenomenal. I don't really understand if any imported EV can match the same price point as M&M is launching. And apart from the pricing, it's also about, the distribution infrastructure, aftermarket and things like that. In all of that, I think M&M has got a huge advantage. And anyways, in overall scheme of things, electric vehicle is not a huge contributor to target price or profits anytime soon for next 1 or 2 or 3 years. Considering that in the background, given the sharp fall that the stock has seen, clearly indicates the underlying negative sentiments in the market, and market typically are reacting to all the announcements that's happening from the US administration on the tariff side. I would want to believe that sooner than later, sanity will prevail and markets will then once again focus on monthly numbers and earnings, and that is when I think a lot of these stocks will actually bounce back.
Right now, while there is perhaps, as you call it, insanity, because that's the best time to buy when you think fundamentals don't get impacted.
Absolutely. One sector which we are feeling very positive about is industrials. You look at those companies like ABB, Siemens, Cummins, all of them have fallen by something like 30 to 50%. While in the budget, it appears that if, the finance minister wanted to push consumption theme, but I must tell you that by no means we are putting capital expenditure on the back burner. Capital still continues to remain a core theme for our economy. Given the sharp fall that these stocks have seen in last 3-4 years, last 3-4 months, I feel pretty excited in terms of valuations. 1 year back, these stocks were at phenomenal, crazy valuations, and investors were running to buy these stocks. And now at this level, given just the insanity, just some negative news flows, people are not willing to buy at this level. From my opinion, these are very attractive levels to get into these stocks.
Pawan, the other sector that's seen significant volatility and selling pressure has actually been the generic pharma names. So, some of these stocks have actually corrected 10-15% from the top. Again, worries from tariffs, worries of reciprocal tariffs. Would you look to add generic pharma names at this point of time?
Yeah, definitely. In fact, we've added a bit in last 5-10 days or so. Again, this tariff thing is a bit, while it appears, that a tariff levied on India will create havoc for India. I must also tell you that, Trump is not targeting only India. It's a tariff across the globe, right? And if things are not getting manufactured in US, I fail to believe how can something, say, for example, pharma sector in India, which is something like 40-45% by volume in terms of total generic exports to US, I don't see a reason why US can replace India by something else, which essentially means that either we'll have a sharp increase in prices or there'll be product stock out kind of situations in US. I fail to understand why these stocks should fall so much. In fact, in my opinion, given the correction, it seems pretty interesting to me at least pharma sector for now.
Pawan, any names you've added in the fall in the pharma space?
Sorry, I think for compliance reasons we cannot talk stock specific.
No, completely understand that. What about the BFSI space? That's another pocket of the market that's not really moved higher much. Where do you find relative comfort there?
I think in the BFSI space, it is better to stick to larger names. Larger names, if you look at the likes of HDFC, Kotak, SBI, etc., all of them haven't delivered great returns in last, say, 1 year or 2 years or so. Having said that, I would want to believe that from here on, credit growth should gradually pick up. Interest rates have been cut, but the real benefit of interest rate cut will happen as and when RBI infuses more liquidity into the system. Essentially, these are banks wherein growth should pick up, asset quality is not a concern, and valuations are also pretty reasonable. If you actually go down a bit into, say, a small finance bank or a mid-cap financial institute, you would find some would have exposure to MFI or unsecured loan or something of that sort. But if you stick to the larger names, I think it ticks all the boxes in terms of earnings, growth, asset quality, valuation. So I think it is better to stick to larger names here, typically the top 5-6 institutes. That is where we think it makes sense on a risk-reward basis.
Any sectors which are a complete avoid for you at this juncture, even after the correction?
I think, I wouldn't say IT is a complete avoid, but we've actually curtailed our positions in IT sector because what we believe is that, possibly, the best, at least in the short to medium term, I don't think dollar will depreciate significantly from now at the current levels. Secondly, typically IT sector in last 2 years, what we've seen is that typically we begin the year with very high expectation and the growth gets moderated over the course of the year. Last 1 year or so, IT has done very well. Valuations are just okay. If globally this tariff thing actually goes on, you will see, while US could do good, but there'll be something else which won't do good. And on an overall basis, IT sector earnings can see a bit of a downgrade from current levels.
Right. Thanks so much, Pawan, for joining us and giving us a sense of what exactly investors could do in the current fall. But